Start off with a scenario that's playing out in, of course, in Europe, this Icelandic volcano creating quite a lot of havoc, and this also then seeping through into Kenya. I mean, around $4 million is what is said to be lost in Kenya, of course, and I'm alluding to the flour market there.
Yeah, absolutely. I mean, it's an extraordinary situation and confirmation of how interconnected we all are in the 21st century. The flour, the fresh produce business is really a just-in-time business. You know, stuff is taken from the farm, put at the airport and transported. And clearly we're seeing a very big problem from the second round effects here in Kenya. As you said, the flour market is, the losses are in the $2 to $3 million range. Kenya Airways has probably got some losses as well. And then you've got all the fresh vegetable people. So it's actually impacting us quite severely.
Well, I've just read that they are going to be keeping airports closed, at least for now, especially in the UK. So losses are expected to be extended at this stage of the game. But Ali, what kind of solutions would you bring to the fore to try and protect Kenya if something like this should happen going forward?
Well, I think the interesting point is we clearly don't have any refrigeration capacity at the airport. Apparently flowers and vegetables are being turned away. Some farms are just dumping the flowers on the farm and not even bothering to bring them to the airport. And I think the lesson is, and it applies all across Africa, is actually the architecture around our primary produce. And I think there's serious money to be made by somebody who builds capacity at the airport to store this kind of thing going forward. But otherwise, I don't know what we can really do. I think we live in a very 24-hour, 21st century manner, and we're supplying goods in real time, and therefore these sort of risks are actually underestimated in the global economy.
Looking at a big trade that occurred on Friday, incredible volumes coming through for Bamburi Cement, even though the stock only closed on a flat note at 185 shillings.
Yes, I mean, I think first of all, the size of the trade, it was about 1.1% of Bamburi's share capital, confirms that there's relatively strong and robust two-way action at the Nairobi Stock Exchange. This is something we did not see through 2009. With regard to Bamburi, it trades on a trailing PE of just over 10. Admittedly, they bagged a gain of 4 shillings per share last year from a one-off sale of some ARM shares, but I think it represents good value. I would prefer to be the buyer rather than the seller here.
Looking at KCB, this stock came under pressure on Friday, down 2.2%. Of course, that's ahead of a rights issue. They are planning to raise 15 billion shillings. That's what they're talking about. Many say that it is offering value. Others say that perhaps they've been burnt before with KCB. They're really concerned about the prospects for this company. But at the end of the day, they are going to be spending 15 billion shillings on capex, which should be good for the company going forward, even though we might be seeing some dilution of earnings.
Yes, I think it's a very interesting conundrum. 24 has capped the price for at least 18 months, and I think it will remain resistance going forward for the near term. They have a tremendous and valuable footprint all across the region. The region is accelerating. That plays in their favor. Against that, I think investors are looking to see when earnings might accelerate. They have not so far. And I think, you know, the interest around it will be at what point the earnings start to inflect. I don't think that's going to happen in the near term, so I think you can sit and wait. The other issue with the rights issue, and I think it's going to govern the share price, is what discount these rights are being sold at. If it's a steep discount, I think buyers will hold onto their shares, and some might buy more in order to get the cheap shares. If it isn't, then I think the reverse happens.
Taking a look at Cooperative Bank and Barclays, of course, we know that they slashed their repo rate, their lending rate. So good news coming on that front. And we've seen these companies enjoying gains. Big question as to who's going to make the next move. Ali, you're on the ground. I think you might have an idea as to what we could be seeing next.
Well, I fully expect the other big cap banks, that's KCB, Standard Chartered, Equity Bank, to follow suit. The yield curve is going one way and it's going at tremendous speed. I was surprised at how slow some of our banks were to adjust their lending rates. I think Barclays took the opportunity to get ahead of the curve and gain all the first mover advantage, which they did gain, and it's rallied a further 10% since the announcement that they were cutting their rate 200 basis points. Investors feel that they're playing more offensive this year, and there's an opportunity to pick up quite a lot of good business. So I think that, and the other thing to bear in mind with the big cap banks is there is a big expectation that they've had some really sterling one-off gains in the first quarter via the bond market, and that's keeping a firm bid underneath them all.
Safaricom keeps losing ground, especially what we've seen over the last few sessions. 0.9% is what it lost on Friday. Of course, we are expecting robust results from this company next week. But on the other end, we saw the Communications Commission of Kenya saying that mobile subscriber numbers increased by 19.3% to 19.4 million. I think the key thing is that market penetration is just below 50%, so ample room for growth for Safaricom and, of course, for its competitors as well.
Absolutely. It's an underpenetrated market. I think, there's plenty of growth in subscriber numbers. And I think the more exciting development is the actual product pipeline, which is also showing explosive growth. The internet, money transfer, the mobile wallet. Safaricom has a first mover advantage in all these spaces. I have no doubt Bharti will be a much stiffer competitor and a more rational one than Zain ever was, but I think that's some way ahead. So I think the market is poised, looking for some good results here in the range of 35 cents to 40 cents. It might be the outlier, but I think the price is well underpinned here, and we should see a move through the 12-month highs of 610 ahead of the results.
Ali, just to end off, a lot of concerns coming through from Goldman Sachs, of course, the SEC
yes.
charging Goldman Sachs with fraud. Apart from that, we've got commodity-linked countries under pressure. We've got all these air traffic issues coming through from Europe, sovereign issues as well coming through from Greece. In terms of how we're going to be seeing the markets playing out in Kenya this week, what do you think is going to be the most important factor?
That very interesting question. I think the Goldman Sachs issue, everyone thought the American regulator was a poodle. They've suddenly morphed into a Rottweiler, not a moment too late. I think, we're literally a little bit unconnected, and this is the advantage of the African markets, the lack of correlation. I think our markets are relatively well insulated from Lagos to Nairobi. I think we're in a steep bull channel. I see nothing to unsettle us yet, and I think we've got more upside to go. With respect to Nairobi, I think there's very little downside. 4042, 1% below where we are, is probably the floor, and I think we project a little bit higher, but it will be a grind this week.